So, good morning, everyone. Thank you for joining. I got the recording service up and running now so we can get into this classroom session. Thank you for everybody for joining. If you want to communicate or ask any questions, just throw it in the live stream chat. I'll be the only one speaking this morning so that we don't get confused. We'll start with bias and higher time frame liquidity points. It seems like the popular topic this morning. I'm also seeing a lot of management and psychology as well, so we can speak about that here and there throughout the conversation as well. If I don't get to any of your questions during the conversation, it's probably because I'm going over an example or want to get through some key points, and I will get back to the chat after that. If I'm not talking about Forex and I'm talking about futures, all of the concepts can be applied the same. These concepts are in both markets, so whether you want to look at EU or ES, it's the same information. So I have ES on the screen. We'll take a look at some higher time frame points of interest, some higher time frame liquidities, and some daily bias. Okay. So we'll start with bias, and you guys have, for all the individuals that have been in the Discord, this is going to sound repetitive, but that's because it is repetitive. It's the same thing happening over and over and over again. So once you're capable of defining the concepts and using them correctly, then you'll be able to be an independent thinker. And that is truly the reason why I even do this. That's why I document publicly, because the best way forward is to be an independent thinker. I don't think using a signal service is a good idea. I don't think playing follow the leader is a good idea. If you wanted to do that, you might as well just work a day job and have a boss. We're all here, from what I believe, the same reason. Like, we want freedom, whether it's in time, whether it's in finances, whether it's in location, and this skill can provide that. This skill can provide that if you're capable of doing it on your own. If you're sitting there always taking instruction from somebody else, then it's the same thing as having a boss. So come in here and strive to learn every day, every week, because the moment that this becomes muscle memory and you're capable of doing this on your own, that's when we're getting closer to freedom. That's when we become an independent thinker, and that's when we're that much closer to the overall goal. So we're going to take a look at bias. So there are many different ways to trade. There are many different traders out there. I know a lot of people here are on Twitter, and you'll see hundreds of different models and hundreds of different traders. Some people will tell you they use bias. Some people will tell you they don't use bias. It's completely contingent upon the trader themselves. I'm not going to sit here and say what is right or wrong. I'm going to tell you what I do. I'm going to publicly document my model. And if that's something that you can resonate with, then sure, use it. If you have your own system and you're doing well on your own, then there's no reason to change anything, right? So, yes, for me, I believe using higher time frame bias and being aligned with higher time frame order flow is key. It's absolutely needed. Some will tell you otherwise, but I'm not going to sit here and say what is right or wrong. I'm just telling you what I do, right? So, when we're looking at bias comes from a daily. That's the first thing you need to understand, is that when we're looking at bias, we are not on a 5-minute chart, right? We're not looking at a 5-minute chart right before New York Open to obtain our bias. When I'm saying higher time frame, one, that means an hourly or higher is what a higher time frame is. But I use the hourly for market structure and narrative, right? And I'll show you in a second. And then I use the daily for bias, higher time frame. I want to be aligned with the higher time frame bias, right? And when you're trying to create a bias, don't get lost in limbo of trying to ask yourself 100 different questions. Boil it down to 1, 2, maybe 3 questions, right? Don't get stuck in information overload where you can't obtain a bias because you're looking at so many different points of information. Right? So like it's very simple and we don't need to overcomplicate it, and this is usually where people get lost, is because they ask themselves too many questions. So we're starting on a daily, right? And we'll back it up so that we can actually do examples too of execution. So I don't know, let's just go back a couple days and we'll go to here, right? So first question we'll ask ourselves is, where are we, right? And in terms of figuring out where we are, I want to know 2 different things. Are we either below an old high or an old low, or are we at an FVG? Figure out where you are on the chart, right? So it's plain as day, right? Here's the FVG. We'll point it out. We're currently at an FVG, right? Furthermore, don't get lost in the information overload, but you can also see, right, if there was a consequent encroachment, it'd probably be right about here. Right, so this FVG is being respected nicely because we know that any closures above consequent encroachment of an FVG is when it's being disrespected. So there's your first insight. We're getting rejected from a daily bearish FVG. Now, second insight is having the understanding of internal versus external. Internal is FVGs. External is swing highs or swing lows. The relationship between internal versus external is that when you're at one of the locations, price will reach for the opposite one. Since we are currently at an internal location, price will reach for the opposite one, the external location. Getting rejected from the daily FVG, never close above consequent encroachment, internal to external. Right, there's 2 concepts right there. You can solely base bias off of those 2 things. It is that simple. Stop overcomplicating it. I did not go into interest rates, seasonality, this or that. Like we don't need to overcomplicate it. Even more important, to be able to obtain a bias and only look at one side of the market will filter out all of the other noise. Right? When you're at New York Open trying to find a position, but you don't know what you're even looking for, and then anytime price moves in either direction, you start to get swayed in that direction because you're so emotionally attached to price. What if you were able to walk into New York Open and say, I'm only looking for shorts today? My daily bias has me looking for shorts. When a short appears, it's going to be clear as day because you've been sitting there waiting for it. Or when only longs happen, you know there's no position. Have some discipline in your analysis to just be flat. It's exactly what happened to me yesterday. To start the week, I was looking for shorts. There was no short positions yesterday because price just kept screaming higher. Do I care? No. Am I okay with being wrong? Yes. Was there any risk taken? No. There was no short positions provided. So having the ability to have discipline in your analysis is going to keep you out of losing trades. It's going to keep you out of positions you've never should have been in. Just because you're deciding to focus on one side of the market. Okay, so let's sprinkle a little more on top, right? Here's the first one. Ask yourself, where is price, right? Are we above an old high or an old low? Are we at an FEG? That's your first concept. Second concept would be internal versus external and that relationship. And if you want to sprinkle a little more on top, take a look at the trend, right? Do a little bit of a trend analysis, right? So if you have a high here, you have a low here, you have a lower high here, you have a lower high here, you have a new low here, you have a lower high here, you have a lower low here. Right, so clearly higher time frame order flow is leaning to the bearish side. We are going lower. There's three concepts. On the daily chart, go over those three different concepts. Now we'll go into the hourly chart for Thursday, October 12th. Let's take a look. Thursday, October 12th. Well, this day already played out, so let's see if we can use this day as well so we can get two different examples in as well. We'll use this day as well so we can get two different executions. So, right, since all of you guys are London traders, this is what the chart would look like before London opened. I backed it up to the hour before London opened. Now we just spoke about bias. Now we'll speak about higher time frame areas of liquidity. I already mentioned what the two liquidities are. Liquidity is an old swing high or an old swing low, or FEGs. Right, so heading into London session, you can clearly see that price is currently located above a prior old swing high, an area of higher time frame liquidity. Multiple swing highs. Actually, I had to zoom in to see this one, but here's another swing high right here. We look for shorts above old swing highs. We look for longs below old swing lows. Okay, so now we're starting to talk about some higher probability here. Why is it higher probability? We're at a location of a short position and our higher time frame bias is bearish. The information's starting to align here. When you're at higher probability times, that's a time that I want to execute. When we are any other time, if we're at a time of lower probability, have the discipline to not touch anything. Just don't touch anything. And this is where the psychology comes in. This is where everybody just, they just need to have a position. No. Have some discipline. Only allow yourself higher probability times, and this is how you generate higher probability. When you can align yourself with time, notice how I went right to London Open, because the only times that we trade are the opening times. I already obtained the daily bias. The bias is bearish, and price is at a location that we would look for shorts. Everything's aligning right now. So now let's take a look. So our areas of liquidity are old swing highs and old swing lows. Price is currently above an old swing high. This is London Open for the 12th. Let's go. Now that we have an area to look for shorts, we also need to draw on liquidity, right? An unfilled FVG. Now, a point that I need to make here too is when we're looking for these areas, they need to be unmitigated. Unmitigated meaning it has not been touched before. I do not want to be using things that have already been used, right? Like this is the very first time price has gone above this swing high. Therefore, I would use it. Price has never touched this FVG after it was created. Therefore, I would use it. All right, so we have a draw on liquidity in the direction of our bias. We're at an area that we would look for shorts, and this is all aligned with our bias. So let's get on our executing time frame and look for a position. All right. Above an old swing high, we need to have the higher time frame liquidity, and we need to have a stop hunt at that location at the time. It doesn't need to be exactly at the time. It needs to be at least at the open or thereafter. So let's see what happens at the open. There's your sweep, right? You're getting a sweep. Now you're getting a stop hunt. I'm sorry, it is the open. 2 a.m. You're getting a stop hunt here. See if there's any displacement. Oh, you're getting another stop hunt. So we're no longer using this one. This might be a topic that we need to talk about, because everybody still uses this stop hunt for some reason. Somebody yesterday mentioned, can you have multiple stop hunts? No, you can't. You cannot have multiple stop hunts. Right? So since we ran above this old swing high, now this is the new stop hunt. There's only one stop hunt here. See what happens after the stop hunt. Now, here's an issue, right? Another stop hunt. displacement lower. Lowest down closed candle would be, let's see, closing price. We're looking here for the closing price because we used the lowest down closed candle before the leg up that took liquidity. So here's your closing price. I'm pointing at it. 42650. 14. All right, so they both are right. So you have all the criteria here. We get the stop hunt, we get the displacement lower, we get the FEG aligned with the breaker block. Now the issue that I was going to point out is this looks like it's not going to give a position. Yep, so anytime price runs to R before an entry is given, I no longer consider the position. So we got a position here. It was aligned with our bias. It was at London Open. But it did not give an entry. No, price entry is always going to be the beginning of the breaker block. Once price runs plus 2R, the position has done its job. Since price has run 2R after the confirmed entry, but it did not give an entry, we no longer consider this. Right, so let's take a look at NQ to see if NQ gave the entry. Because usually one shows the SMT. We were on the 12th at London Open. The 12th at London Open. We'll do the same thing for NQ. And I'm moving over to NQ because usually one shows the SMT and then one provides the entry. So do the same thing here. Hourly swing high. This is, gotta get, okay, so it is. So we have a swing high here. It would be the same exact bias because both of the indices follow each other. So I'm outlining the hourly swing high, the higher time frame area of liquidity, and we'll do the same exact thing. This is exactly what we do at opening price. Right, we're looking, we obtained our bias, we obtained our higher time frame area of liquidity, and now at opening price we look for triggers. So here's 2 o'clock right now. Okay, there's a stop hunt, right? This is a stop hunt right here into the higher time frame area of liquidity. Okay, here's another stop hunt. Right, so again, lowest down closed candle before the leg up that took liquidity. Right here. And you have to understand that I'm saying closed. Lowest down closed. Closing price. The lowest closing price. I think we even had this conversation the day this happened. I understand this has a lower price, but the closing price of this candle, right? Look right here. Closing price of this candle, 15,436.25. Closing price of this candle, even though it's not the lowest candle, I'm looking at the closing price. 15,438.25. This one has the lower closing price before the leg up that took liquidity. That would be the breaker block. Right? We're at London Open. We're aligned with bias. We've gotten a stop hunt. But we need displacement that also leaves an FEG aligned with the breaker block. This is the very first moment right here. This is the very first moment that all of your criteria has been completed. All of your criteria has been completed because we've gotten the higher time frame lick taken here, right? The hourly swing high. That's the first thing. The next thing is the stop hunt. Oh, how did that happen? The next thing is the stop hunt. second thing, right? It's all happening aligned with our bias, and it's all happening at London Open. We only trade the opening times. After the stop hunt, we identified the breaker block. Since there's only one candle, there's no consecutive down closes here. We only use one. Since it's the lowest down closed price before the leg up that took liquidity, this is the one we're using. Then we need clear and decisive displacement through the breaker block. Notice how this displacement here had no issue closing below the breaker block. No issue closing below the breaker block. We also need to have an FVG aligned with the breaker block. There it is. This is the very first moment. As soon as this candle right here closes, that is when I'm setting a limit order for a short at the lowest down closed price right here. The beginning of the breaker block. Right? So now I'm going like this. As soon as this candle closes, my finger is on the trigger and the position looks like this. As soon as that candle closes, limit order, beginning of the breaker block, stop loss above it. It's time. As soon as any buttons are pressed, understand all control has left your hands. Make sure you do all of your due diligence before pressing any buttons. And your due diligence is these justifications to your actions. Everything that I've said so far this morning is the reason why. It's the reason why I would press a button. Higher time frame bias coming from the daily. Hourly areas of liquidity. 5-minute executions at the opening time. When we execute, we confirm all of our criteria. We do not press any buttons until all of the criteria is confirmed. See if you get an entry, see if you get 2R or minus 1R. There's your entry. You're instantly tagged in right after confirmation. The first candle given is your entry. Right to 2R. All of these are limit orders. All of these are limit orders. And that's why I'm saying as soon as you press any buttons, all control has left your hands. You either get limit ordered in and you have a stop above the breaker block. You also have a limit order for plus 2R. When it comes to execution, all of your due diligence is done beforehand. As soon as you get into a position, it's an either or scenario. Either you get stopped out for 1R, minus 1R, or you get plus 2R. There's no, here, let's do an emotional position now, right? Like, let's do an emotional position now. Okay, you have all your confirmed criteria, but like, you know, I want more confidence that this is going to work out, you know? Right, so, okay, yeah, sure, it got rejected from the breaker block. Sure, I'll market order in now. Look how much more risk you're taking on. A stop that was 8 points is now 14 points. Furthermore, you still have to be aiming for 2R. So look how much more price needs to go for you to even obtain 2R. Just because you wanted further confidence that this was going to work, and you're market ordering in after you get some sort of justification. Okay, sure, you're positive, okay. And here's another thing now, though. When you become positive, don't be so scared for this to become a loser that you choke your stop up all the way above entry. If you're trying to trail your position so tight, you're asking to be taken out of the market. The risk is accepted before the trade is taken. So those are two emotional roller coasters that need to be talked about. We're not chasing price. Our justifications already happened. If these are the justifications to your actions, execute them. Do not wait for your emotions to align with it. And then during execution, it's an either or scenario. It's either -1R or +2R. Or don't take the trade at all. If you cannot accept the risk, do not risk anything. Let's do one more example, and then we'll do some questions. Coming up on close to an hour already. Let's do one more example here. And we will go. I mean, I guess we can just do the next day, but let's go back to ES since we looked at NQ this time. We'll just do the next day so that it's almost even like we're just backtesting. So we're going to do the 13th, right? So the 13th, at this point in time, or we just did the, which day did we just do? We just did the 12th, right? So we don't want to see the 13th. So this day for me is tricky because, and you saw it in my analysis, is right here. There's a breaker block right here. It's not a unicorn because there's no FVG aligned with it. It's only a breaker block. Down, up, down, all the way through. This was a tricky day for me because I thought we were going to bounce from this breaker block here. You also have a little tiny FVG in here. Let's keep looking at this bias right here. The bias we just generated. Price is getting rejected from consequent encroachment of a daily FVG. So then we would look to move external after that, right? Then let's go down to the hourly for higher time frame areas of liquidity to search. And let's go to the beginning of London again. Okay, we'll do London again since I know all of you guys are always speaking about London. So a few things that could be pointed out here is smart money reversal here, right? Breaker block, displacement lower, we sold off from it. Right, so this is buy side of the curve here. It looks like we're on sell side of the curve now. So now heading into London Open, again, you want to be doing something. If the bias is bearish, you want to be doing something bearish. Shorting above an old swing high, right? This one's even better because you have an old swing high into a bearish FVG. So let's look at shorting above the old swing high. Marked out the old swing high there. And now let's go down to our executing time frame. This is perfect. This is London Open right now. What do you see here? See, so even if you, I'm getting a little off track here, but even if you were to have not taken any bias and just took the first position that was presented, look what happens here. London Open, sweep of the lows, displacement higher through the breaker block that left an FVG. So we're sitting here talking about bias, and then the person that doesn't even obtain a bias still gets a W. See, and this goes back to the very first comment that I made. I'm not going to sit here and say what is right or wrong. I'm just sitting here to tell you what I do. Some people don't use bias. That's completely fine. Some people do. That is also completely fine. Here's a great example of the people that don't use bias, right? They just align themselves with London Open, and they have a trigger. Okay, London Open happened, bullish trigger happened, plus 2R. That's a bit off topic. Let's go back to our bias conversation and our higher time frame liquidity conversation. We were bearish from the daily. You get an hourly old swing high. So now that we've ran that old swing high and we are in London time, I would start to look for shorts here since we finally got above the old swing high. Right, so this was your first stop hunt, but we never displaced through the breaker block. Here's your second stop hunt. Now, here's your new stop hunt. Let's see what happens after this stop hunt. Oh, another stop hunt. Okay. Where would the breaker block be here? Since this is the stop hunt, these are the lowest down closed candles before the leg up that took liquidity. Since there is consecutive candles, we would use both of the candles. At the current moment, you have a run above an old swing high, but you still need displacement through the breaker block. Old swing high, stop hunt, there's no displacement or FVG through the breaker block. There's your displacement there, right? Through the breaker block, FVG aligned. This is a shorting opportunity here. From the breaker block to plus 2R. Let's see what happens. You had two opportunities to get in. You had 10 minutes to recognize this. 1, 2. Plus 2R. We created a daily bias by asking a couple simple questions. We moved to the hourly to look for hourly swing highs or swing lows or FVGs. We aligned ourselves with time, seeing that we're only looking at London Open. Once London Open occurred, we then started searching for our entry function. We only used an entry function that was aligned with our bias. Once all of the criteria to our entry function was confirmed, entry at the beginning of the breaker block, stop loss above the breaker block, aim at plus 2R. Management for the position is either or, minus 1R or plus 2R. 2 days in a row, you just obtained plus 2R both days in a row. I'd be done for the week. 2 W's in 1 week. After that, it's a matter of protecting your profits. After that, it is a simple business decision to decide that I'm not giving back any of the hard work that I obtained. Go hang out with your family, go work on your health, come back next week. So that was a quick, close to hour on bias and higher time frame liquidity. The key points are the bias comes from the daily. When we're obtaining bias, we're asking a couple questions. Where is price located? Are we above an old swing high? Are we below an old swing low? Then we're understanding the internal versus external relationship. When price is at one of them, we're looking for price to move to the opposite one. And if you want a little more out of that, you could look at trend a little bit. Higher highs, higher lows, or lower highs, lower lows. If it is not clear at all, then you don't have a bias. If there's no clear trend, then you can't have a bias. So that is the key importance to bias. It comes from the daily. And then your higher time frame areas of liquidity. You're going on your hourly and looking for an old swing high or an old swing low. You're looking for an FVG. That's it. We want everything to be unmitigated, meaning it has not been used before, and we are aligning ourselves with time. I also want to make the comment of time frame alignment. Notice how I only went to the daily. From the daily, I moved to the hourly. From the hourly, I moved to the 5-minute. Time frame alignment. It's in the resources section. If you don't understand what I'm saying here, go through the resources section, read over the material. Time frame alignment's in there as well. The time frames are directly linked to each other. That is where time frame alignment is coming from. The hourly is directly linked to the 5-minute. That is why we analyze that way. Executions always come from the 5-minute. Executions always occur during the opening times. That's everything. That quite literally is my model. We just walked through what I do every single day. The parts that we didn't talk about are, we talked a little bit about management and execution. We talked less about risk management, so I'll make a quick comment on that. Everybody's so insanely driven to try to get rich as quick as possible. Well, here's reality. That is not going to happen. Period. End of story. This is not the lotto, okay? We're not playing the lotto. There will never be a time where one position makes you rich. Period. You will have to do this hundreds and hundreds and hundreds of times to obtain your goals. So to withstand that amount of time that it will take to complete this action hundreds of times, you need to have these justifications to your actions. They need to be completely defined, and you have to have the discipline to follow them. And I'm saying that because I was going into my risk management here. I only take one trade a day. I do not trade more than once in a session. Furthermore, I only trade 2 times in a week. Right? So if I traded on Monday and Tuesday, 1 trade a day each, I'm no longer trading for the rest of the week. I don't care if there is something on the screen. I don't care if the nicest looking unicorn is presented at the exact correct time and it plays out correctly. I don't care. I don't care. Risk management will always be the #1 priority. If you don't understand how to risk because you're too emotionally impulsive, you're not going to be around for long. Stop trying to take 10 trades in a day. Stop taking 20 positions in a week. You're clearly just rushing. So if you want to go over a couple questions, I'm not going to stay on here much longer. It's now been an hour. I'll go over a couple questions. If I don't get to your question, it looks like the chat has been moving a little bit here during those explanations. I'll go over the chat real quick, go over a couple questions that are in the chat, but I'm not going to stay on here for much longer. It's already been an hour. I guess I'll just work backwards here. Do we need displacement through the structure or through the breaker block? Normally the structure is the breaker block. Normally the breaker block is the last, like you could see it on the screen here now, it's still up. Where is the pattern tool? Right, so if you were to draw a line, this is the structure that you're referring to, right? See, we broke through the structure. This is the structure here. That structure was the breaker block. When it broke through the structure, it was the breaker block. So yes, we need a break through the breaker block, and almost all the time, the structure is the breaker block. Most of the time we have a 4-hour bullish OB and a big FEG below. I don't use order blocks, so I don't get lost in information overload. I use old highs and old lows and FEGs. I do not position before 9:30. The PDF says news drivers. I do not position before 9:30. What if the BB is not the low? In an uptrend, you got to go over the definition of what a breaker block is, because you don't use down close candles for a bullish breaker. Here's a bearish breaker. A bearish breaker, you use the lowest down close candle before the leg up that took liquidity. Here's a bullish breaker. A bullish breaker used the highest up closed candle before the leg down that took liquidity. Can we consider if the candle breaks the structure only by the wick? So I just released a displacement video on YouTube. This will answer that question. If it's only the wick that goes through the breaker block, that is lethargic. That is weaker than a strong close below the breaker block. So you need to be able to define what is stronger and weaker, because that's going to provide higher or lower probabilities. If it's only going to be the wick that goes through the breaker block, that is lethargic. That is weaker than if the entire candle closes below the breaker block. Yes, it can still work out, but what I'm saying is you need to be able to understand what is higher and lower probability. No, the breaker is the same exact every time. It is no other, there is no other pattern. It is a low, a high, a lower low, a new high. That is the only thing that is a breaker. Same thing for a short. It is a high, it is a low, it is a higher high, then it is a new low. Stop hunt before, after, higher time frame raid. You need both. You need, so here, there's a, I'm not going to be able to pull it up. I'm not going to be able to pull it up. Maybe I can write it on the screen. See if maybe I could just write it on the screen. I could do that. All right, so question. Oh, wrong button. Here you go. Why is that so small? Stop hunt before or after the higher time frame raid. You need both of them. And this is literally the quote right here. You have to understand where there is liquidity. The best breakers are going to see two levels of liquidity. The short term, meaning the stop hunt, and then the higher time frame liquidity, meaning the hourly buy side or sell side. You need them both to occur. When we make a high, but when making that new high, the lowest down close candle is not the swing low, do we consider that still the breaker? No, the breaker will always be the lowest down close candle before the leg that took liquidity. Up, down, all the way through, all the way through. The breaker will always be found in this leg. Will never be found in this leg. When we make a high, but when making that new high, this new high will never have the breaker. It has to have this pattern right here. High, low, new high, new low. The breaker will always be found in the leg before. This is the leg that took liquidity. Leg that took liquidity is right here. Why did it take liquidity? Because it ran above the old swing high. The breaker block is the lowest down close candle before the leg that took liquidity. Again, for everybody that's in here, you have to go through the resources section. It seems as if maybe we haven't watched the videos. A lot of these questions are in those videos. If you see a unicorn in ES and NQ at the same session, do you only take one trade? Or I only take one trade. There's only one trade per day. There's only 2 trades per week. I do not put limit orders on multiple assets at the same time. No. I watch 4 pairs, EU, GU, SPX, NQ. Yeah, I don't know why you're saying SPX. You should be watching ES, not SPX. No. Can I take all of the positions? Or you guys aren't understanding risk management. If you're placing limit orders on 4 different charts at the same exact time, are you managing risk correctly? Are you even risking correctly? If your risk calls for 1% or less per position, if you take 4 positions, then you're risking more. When looking to the left for a draw on liquidity on the daily, well, I get the bias from the daily. I get draw on liquidity from an hourly. How many days will you go back in order? All right, so take a look at this right here. Right, so I'm looking at what has currently happened. I'm not looking at 10, 20 days beforehand. This was what we just went over. This was the hourly swing high that was heading into London Open. Right, so you can also see there's a draw on liquidity there too, the unfilled FVG. We're looking at current information. I'm not going back like 20, 40 days. I'm not. It's what's currently happening in the market. Do I ever go for higher RR? No. I do 1 to 2 RR. Yes, the 5M stop hunt can happen after the higher time frame is rated. It is still a valid setup. That happened right here. Hourly swing high taken right here. Had one stop hunt, then it had two stop hunts, so it happened after it was taken. All right, so I know everybody else has questions too. There are a lot of questions here. I am going to stop it there. We've been here for more than an hour now. I also need to get prepared for the Open, so I need some time to make sure I'm ready for New York Open. I'm sorry if I didn't answer any questions, but bring those questions to the general chat and we will keep going over the information there. I just need to finish the live stream now. For anybody that missed the live stream, I will upload the live stream to the Discord, so you'll be able to find it again. I'm very grateful for everybody that showed up. Thank you. We will continue to do this. We normally do this weekly, so just continue to strive to learn and continue to get better each day. We need to withstand the test of time. We're not going to, reach all of our goals tonight, tomorrow, or the next day. We just need to keep showing up, and we need to create that muscle memory so that over time we are able to be independent thinkers and that we can achieve this skill on our own. I'm very happy to answer any questions and provide any information along that way. So please always feel free to reach out in the general chat, on Twitter, whatever works best for you guys. I hope everybody has a great day. Thank you again for joining, and I will see you guys in the general chat.